How's it going, everybody? PK Investing here. About a month ago, I uploaded a video going over what I define as a cash generating engine. In that video, I revealed that my engine of choice was the ETF QYLD, but I didn't really go into too much detail. Well, that's the goal for today. I'll be walking you through a casual look at QYLD, and we'll see how the ETF measures up. Let's get into it. The Global X Nasdaq 100 Covered Call Exchange Traded Fund, ticker symbol QYLD, is the ultimate income ETF. When you think of an ETF, a few things come to mind. First of all, you think of a basket of stocks, a collection of various companies bundled together. You think of diversification, of reduced risk. You think of financial stability and low volatility. The last thing you typically think of when you hear the term ETF is writing call options. Well, that's pretty much all QYLD does. The fund has a collection of stocks from the Nasdaq 100, and it sells covered calls on those stocks. The premium gets passed on to you in the form of a monthly dividend, and that's basically it. It's that simple. One thing to remember is that QYLD is an income ETF, meaning that the fund has sacrificed capital appreciation in return for larger, more consistent dividend payments. Another thing to remember is that since its holdings come from the Nasdaq 100, those holdings are pretty much the biggest names in the tech sector. I'm talking companies like Apple, Microsoft, Amazon. These are all some big name companies, and knowing that these giants make up QYLD's holdings gives me a little peace of mind. Like every stock or ETF that you can buy, there are positives and negatives, and I'd like to discuss both. For starters, QYLD is a monthly payer. That means that you can expect a dividend to be paid out every single month. Considering this is an income ETF, that shouldn't be surprising. With most monthly paying stocks or funds, the dollar amount that's paid out each month per share is usually relatively small, since the annual distribution is being sliced into 12 instead of the usual 4. But since QYLD really pushes itself to the max, its annual yield is usually anywhere from 10 to 12%. So even if the monthly dividend is relatively small, it's still maintaining a generous yield. And if you drip or reinvest the QYLD dividend back into QYLD, you're going to see some very quick compounding. So we've established that the dividend is nice, but has it always been this way? The answer to that question is kind of yes. If you look up QYLD's dividend history at Nasdaq.com, you'll see that they've paid about the same amount on average each month. For the past few years, the dividend stays somewhat the same, usually between 15 and 20 cents. Sometimes it peaked over 20 cents, and other times it was reduced to around 13 or 14 cents. But for the most part, it stays in that range. And while we all know that past performance isn't totally indicative of future performance, I think it's safe to say that there's a trend. Now, I love talking about dividends, and I'm sure you love them too, but I think it's time to answer a big question. What about the taxes? Read my lips, no new taxes. Let me know in the comment section if you got that reference. So taxes. How do they work with QYLD? Well, it depends. For a normal company held in a traditional account, the dividends eventually become qualified. So you essentially have to pay a smaller amount in taxes. But QYLD is not a company, so that doesn't really apply here. There's a lot of uncertainty when it comes to how QYLD will classify its dividends come tax time, but investors should be prepared to pay their respective income tax rate. Now, you could hold QYLD in a tax-sheltered account, like a Roth, that would let you ignore the whole tax thing entirely. Another possibility is that they could classify the dividend as a return of capital, and while that would be really nice and advantageous, it would still be wise to prepare for a worst-case scenario. Alright, growth tax talk is done, so let's get back to the good dividend talk. The last part of this video is going to be going over QYLD's latest dividend declaration. Just today, it was announced that QYLD's next dividend is going to be 21.67 cents per share. Last month, the dividend was 21.19 cents, so we're seeing a small little increase. The ex-dividend date is today, October 19th, so if you bought QYLD today, you will not get the dividend. The payment date is going to be October 27th, which is a week from today. And I'm sure you've noticed that the screenshot I've used is not from my usual Robinhood account. I actually switched brokerages a few weeks ago, so I'm doing all of my stock trading with Fidelity. And one perk of Fidelity is that they're really good about giving you dividend information early. Like I mentioned in my cash generating video, I'll be taking my QYLD dividend as cash instead of dripping, and that money will be invested into the companies I hold in my long-term dividend growth portfolio. In a sense, QYLD is a cow, and I use its manure as fertilizer for my plants. You already know how I feel about QYLD, but let me know what your opinions are. Do you think the fund is playing a risky game by selling covered calls? How do you think the taxes are going to go? I'd love to hear what you think. Until next time, take care, and I hope to speak with you again real soon. I am not a financial advisor. Investing always involves risk. This video was created for entertainment purposes only.